So it's the eye of the storm. Are we going to get a storm for the markets? We'll find out. Jason Shapiro joins us once more. He returns to dissect what's going on with the markets and what trades he's putting on right now. He's a founder of the Crowded Market Report. He's been featured on Jack Schweiger's Unknown Market Wizards book, excellent read, excellent trader. Thank you very much for coming back, Jason.
Thanks for having me, David. Good to see you.
6,000 points on the S&P. What's the sentiment right now? Overcrowded on that one?
I don't think it's even close to overcrowded. No.
Really? Okay, so more bullish action to come. Is that what you're saying?
I think the market still has upside to go. Yes. I don't know that it's going to come necessarily this minute or this day. Sorry, I just want to turn off my phone. But I think that certainly the second half of the year, there's a good chance that the market's going to go higher.
Whenever the market's correct by the order of 15 to 20% and then rebound again back to its almost highs, prior levels. I'm talking about early April after Liberation Day when the markets went down 20% and then we had a V-shaped recovery. What do you do as a trader in that situation? Do you just kind of ignore that blip or do you say to yourself, all right, the rally's in, maybe it's time to take some profits?
I don't do the second one most likely. It all depends on what the various indicators that I'm looking at are telling me. Did people buy that dip? Did they get scared into that dip? Have they bought the
Yeah.
rally back? Have they not bought the rally back? That's the kind of things that I'm looking for. By my
Well,
read, they did quite a bit of selling into that dip, and they have not successfully bought that back. So I find that market to be most players to be a lot less long now than they were the last time the stock market was up here.
what do you look for in terms of signals to see whether or not something like this? I'm just pointing to early April, late March, when something like this is a beginning of a protracted bear market or just a temporary correction here. Do you, what are the trading signals and sentiment indicators that may point,
I mean,
to you what this
focus,
is?
I focus a lot on positioning stuff to see, are people buying into this dip or are people getting scared out and selling into this dip? In this particular case, they were in fact selling into this dip.
Hmm.
And then, at that point, you kind of want to to see, wait for a good market reaction to try and figure out when to get back long. And you can see actually on that bottom day was a reversal day. And that was on a Monday, if I recall. And it was on a Monday after there was some very bad news over the weekend that was confirming all these fears that were going on back then, right? About the trade
Mhm.
stuff, all that. And yet the market rebounded and closed up. So, given that everybody was getting short, given that now the market was no longer responding to negative news, that was really the good risk reward place to go. And of course, we found out 2 days later why that was because he then did the whole taco thing. I was the original taco right there 2 days
Yeah.
later, and he had one of the biggest rallies, in history. So, and I find that we're kind of still there. They haven't really bought back a lot of this stuff from the positioning stuff that I look at. They bought back some, but like I say, they're a lot less long now than they were the last time we were up here. So I think there's still more juice to the upside. Although clearly we have a lot of things going on in the next month or so between the trade stuff and between, now the new Middle East stuff and all that there's probably going to be some volatility in the next month or so.
Sure.
But I am a believer to this point, unless this positioning and psychology sort of changes. I'm a believer to this point that this is ultimately going to resolve itself higher.
Wait, so how exactly do you determine positioning? Do you look at, I mean, how do you know, just looking at the volume data, if someone or if people are buying or selling? Do you look at the options? Do you look at, uh, puts and calls and and
I use
how
the
do you how do
commitments
you
of I use the commitments of traders data very extensively,
okay.
which shows positioning in the futures market. I do look at put call ratios as well to get a feel for that type of thing too. And then I do a lot of listening to people.
Okay. So what are people saying now?
I think that once we had this rebound, suddenly people were believing that it was sort of a layup to new highs. So I was getting a little nervous based on that. There's never a layup. So I think people, for the most part, are still underweight, um, and they are getting a little bit scared out now because of the risk that's going on with the Middle East and all that. Um, so it's neutralish to me, but psychology wise, but positioning wise, they're still, I believe, a lot less long than they should be, given where the market is.
Do you look at the VIX as a sentiment indicator?
Not really.
Okay. Well, going back to the war in the Middle East, the S&P 500 hasn't moved as much on that news as it has on tariffs, which, which was one of the reasons why we went from February's high to April's low. But anyway, what's your read on how the markets are interpreting this war in the Middle East? Can we look at this? Can we, let's just take the opposite side of this coin. Can we look at this as an indicator for whether or not things will escalate? In other words, are markets appreciating in that regard?
What's the market done since the since this new thing started? It hasn't done
Yeah.
anything. Market hasn't really
Right.
got since this has started. And I will point to the fact that that's because I believe people are already underweight. But, it's kind of a tough read on that one because clearly we can look back at recent history and see that if you had panicked when Russia-Ukraine started, you regretted it because the market's up a lot since then, right?
Mhm.
And Russia-Ukraine hasn't gotten any better, but the market has gone up a lot since then. If you had panicked late last year when you had your first skirmish between Iran and Israel, um, you wish that you didn't because the market's higher than it was then too, right? So I think people have caught on to that, and so they don't want to be suckered into that again, which is a little bit dangerous. Just when you think it can happen is when it does happen. But at the same time, it's hard to argue with the market performance. It really has been very strong in the face of this, and um, these kind of events, I think, don't change the ultimate course of where the market is going. They will change the path, they will create volatility along the way, clearly. Um, but I don't think that they change the ultimate path. So, and I believe that the ultimate path still is up, stock market.
So what does typically change or alter the ultimate path of the markets?
When people get too long or when people get too short, if
Yeah.
say this thing ends up, and we don't know how it's going to end up, and anyone who says they do know how it's going to end up, I think is
Mhm.
not being totally honest because nobody knows how this is going to end up. But
Sure.
let's just say we got to a point where suddenly things started looking better, right?
Yeah.
It started de-escalating. And then, the trade, it's the wall of worry. Let the wall of worry crumble, right?
Hmm.
Let the Middle East situation get better. Let the trade thing get better. And suddenly there won't be any reason to be short anymore. And then nobody will be short anymore. And then that's when you start to worry about the market being over discounting in all the good news, right? I can't say we've over discounted in all the good news right now because honestly, I haven't seen any good news. You know, for the
Yeah.
last month, I haven't seen a single thing of good news. Economic numbers have all pretty much come out weaker. The employment numbers are weaker. We had this thing between Iran and Israel. None of this is considered good news. So I can't say that everybody has discounted in all the good news because there hasn't been any good news.
Sure. So let's take positioning data, for example. Let's take the commission, um, but yeah, positioning data in the commitment of traders report that you look at. So do you have a rule for how many days we have to have long positioning in the commitment of traders? Let's say 5 days or 2 weeks straight, where you think, okay, enough. People have been long enough. Maybe it's time to, the wall of worry has crumbled definitively. Now it's time to maybe take profits. Because certainly, if you have one day of really long activity, that's not enough data, right?
No, I mean, I look at the data relative to where it's been in history.
Okay.
Um, how long are they relative to where they've been before? How short are they relative to where they've been before? I'm looking for extremes because I'm looking for me, my personal trading, I'm looking for market turning points. So market turning points happening at positioning extremes. So I'm looking for extremes. We do not see extremes here. So that,
Okay.
that
Can you give us an example of what looks extreme to you? Like you look at the data and you go, wow, that's extreme.
long silver is extreme.
Mm-hmm.
Some of the currency positionings against the dollar, not all, but some, like the yen, and arguably the euro, are extreme as people have suddenly become, very, very bearish dollar, obviously.
Yeah.
Um, I'll go back and say that the last time we saw extreme readings in the dollar was in January, where we saw it extreme the other way. Everybody was super long dollar, super short pound, super short euro, super short Swiss, super short Aussie, super short New Zealand. They were super short all of these currencies back in January.
Okay.
And now suddenly, after a 10% or so drop in the dollar, now they've completely flipped. Now they hate dollar. And back in January, we had the cover of The Economist, about the American dollar and US, exceptionalism and all this, right? And the sentiment was just all about dollar back then. So what happens when that happens? Well, we flip, right? We go the other way, dollar drops 10%. Now everybody flips and now they hate dollar, right? Sentiment, they hate it. So I'm seeing some extreme stuff in the yen, and you can see that while the dollar has continued down and is pretty close to lows here, the yen really made its made its top quite a while ago, right? Back in early May, whereas the dollar was making new lows all the way into just last week. And that's because the positioning in yen was so extreme at that point, in particular relative to the other currencies.
Okay. I want to come back to currencies in just a minute. But let's take silver as an example here. So you said long silver was extreme. It's been sliding down ever since basically 2 days ago. But you're right. It has moved up tremendously in the last 2 weeks since the beginning of June, up 13 and a half or
Didn't
14%. Yeah.
didn't really hit its extreme levels until about a week ago on
Okay,
positioning.
so how do help us out here? How do you determine at what point do you think this is like it could have been extreme here, it could have been extreme there? I mean, at what point
You're
do you
you're looking
determine?
you're looking at price. I'm looking at the commitments of traders positioning data.
Yeah,
So you don't have that on your chart here, but if you did,
sure.
you would see that they weren't extremely long for this whole time
Hmm.
until about a week ago. During that
Ah,
move up the last few weeks, they really chased it higher and got long relative to where they are in history. They're in like the top, 98 percentile of how long speculators are in silver here. So doesn't mean the market has to go down, but it means the risk reward has certainly adjusted at that point.
and you look at the positioning of the of traders report relative to history. So can you just give us a benchmark here? So let's say traditionally it's been what 60-40 long short, and then now it's 90-10 or 80-20. Like is there a ratio? Is there a number? Is there a rule you follow?
I take the data and I index it. So I turn it into an index from 0 to 100. So
Hmm.
when the index is above 95, that indicates to me that people are way too long, and that's when I'm looking to
Ah.
go away. When the index is below 5, that indicates to me people are way too short, and I'm looking to go long.
Makes sense. So it's stochastic. It continuously moves. Do people does the market? I mean, you said it doesn't have to go short. It doesn't have to fall. But does it typically mean revert whenever you have a 95 or a 5 right after?
I would not necessarily say that it typically mean reverts. What I would say is, from a trading perspective, it offers great risk reward because if it does start to fall, right? And you have all these people that end up getting caught long and have to start liquidating, you know, it can fall a lot, right? That's really, for me, what trading is, trying to find asymmetric situations like that where if you're wrong, you can lose $1. And if you're right, you can make $5 or $6, right? That to me is what trading is. And that's what this helps to highlight. I don't think that it necessarily means because they got super crowded that it has to go one way or the other. Because a lot of things happen. Sometimes it gets super crowded and then they start getting out of it and then the market continues up, right? You never really know with that. All it is to me is highlighting these asymmetric possible trades.
Yeah. Okay. And I know you don't follow price, so the fact that it's corrected a bit since its highs, that doesn't really matter to you as long as the positioning is still long. You would still stay out of it.
Correct.
Okay. So is it still extreme long right now in terms of
I
positioning?
mean, it was only a week ago that it got extreme long. So, I
So,
mean,
okay.
get new data pretty soon, but it usually takes anywhere from a few weeks to a few months before it sort of neutralizes.
You were talking about the yen. Here's a yen chart. Again, let's talk about positioning for the yen chart. Um, I mean, any practical trades you would place on the dollar yen at this point, or would you stay out of the market?
Well, I mean, I'm short yen here, but I'm short yen from a while back. I wouldn't necessarily short it here because I don't think the risk
Hmm.
here is as good as it was on the original entry, but I would not really be long yen here, certainly. I don't think that's
Okay.
a great risk reward trade. I would prefer other currencies. Um, if I were going to try and be short dollar, I would be short other currencies other than yen.
Let's take a look at the DXY. So this is the dollar versus a basket of currencies. It's been trending higher ever since June, but the longer term trend, if you zoom out since the beginning of the year, has been weaker dollar and actually quite extreme moves for the dollar. You're looking at from 110 all the way down to below 100. So I mean, one
Well,
might
like
look
I
at
say, we
this.
had some back in January, we had some very, very extreme positioning in dollar, in
Yeah.
the currency positioning, right? The other way. People were mega long dollars. They were mega short all of these currencies, right? So when you have that kind of positioning and things start to reverse, as this did, it can be a big move because you have to get a lot of liquidation going, right? We've had that now. Most of that liquidation is gone. I'm not saying that they're extreme the other way on all these currencies, but they are in some of them, like yen, right? So, that's kind of what helps cause a big move, right? And they
So
went
when the
people
extreme
super
positions
bullish,
are gone,
super bearish. So you go from the market goes from super bullish to super bearish. Well, there's going to be a big adjustment in price.
yes, certainly. So when the markets, so when the extreme positions are gone, I mean, typically what that means is, correct me if I'm wrong, you don't take a position right after that because it's not going to swing either way, possibly. You just kind of wait for an extreme because at this point, I mean, you're not saying you would go long the dollar right now, right?
I mean, I am long the dollar versus yen, but
Okay.
I'm not long the dollar index, but I
Yeah, it
am
depends on which currency pair.
I am short yen.
Okay. Let's talk about gold. Gold's interesting. Can you just walk us through the logic here on gold and maybe what's been pushing gold up to new highs ever since the beginning of the year? I mean, I'm not even going back to 2024. Let's just take the beginning of 2025. It's already up 30%.
I mean, David, the central banks and the governments have learned that there is one thing, and this is dangerous, obviously, but there's one thing to do. It's all they do anymore, right? Which is they just print money, right? That's their savior, especially since '08, right? It's all they do. Anything gets weak, print money. Anything, it's all liquidity, 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 right? That's all they know how to do anymore. So that's going to be beneficial for gold over time, right? If they keep doing this, it obviously debases fiat currencies, to use a word that the Bitcoiners love to hear. Um, but that's always going to be good for gold as well, right? So gold is doing exactly what it should do. It's amazing to me that during this run, this year, when I look at positioning, we have actually seen speculators selling into this rather than getting longer into it. So for me, if I were going to be long a metal, gold is the metal that I would prefer.
Is positioning still on the long end after all this run up?
They haven't. They've gotten less long. They're less
Interesting.
long positioning in gold than they were 3 months ago.
Hmm. Okay.
Which I
Uh,
don't know why that is. You know, it doesn't make sense to me. If you're a trend follower, I don't know why you wouldn't be max long gold here.
yeah.
If you're a macro fundamental person, quite, I don't know why you wouldn't be long gold here. But for whatever reason, they have sold into this rally. So to me,
Well,
that means positioning wise, there is more juice that can push it higher.
a novice investor or even a seasoned investor, it doesn't matter. Somebody might say to you, look, forget positioning, forget history, all that. Let's just take a look at the price action uh, since the beginning of 2024. Gold historically has not run up 50% in the span of a year. That's only happened like three times, I think, in its entire history. 2020, 2011, but that was a huge, multi-year run up. and then late 70s. But anyway, this is not normal. I'm looking at this chart. It's looking frothy. I just feel uncomfortable getting in it at over $3,300 an ounce after it's already run up 50% on an asset class that doesn't usually do that. I know that's not a very technical explanation, but that's just the way some people feel.
Well,
That's how the
that's why most people remain in the uninformed and amateur investor level because
all
that's the way
right.
they think, right? Fading price is not a great idea. Let's just say gold we're going to go up 50 times, just for an argument's sake. We come back in
Yeah.
10 years and gold's up 50 times. Well, before it goes up 50 times, it has to go up 50%, right? I'm
Hmm.
not saying that's what it's going to do, but
I understand.
just looking at price alone is just go back on your chart. Go back to what you were just doing before, to the longer term chart.
Yeah.
Okay. Couldn't you have made the same argument anywhere along these lines here? Look at the move in 2012. Well, I mean,
Yeah.
and meanwhile, look where it is now. Were you happy or are you sad? Even if you sold gold there at that top and never bought it back, are you happy or are you sad?
Yeah.
Like price is not the best thing to be looking at for those type. I understand the logic. Hey, it's gone up a lot, therefore buying it here seems silly. Okay, but that doesn't
By the way,
work.
I've personally been burned by the reverse logic. Something's gone down 99%. And I thought, you know what? It's already gone down literally 99%. This is a crypto. This is Luna, by the way, just for people watching. And I
Yeah.
thought, okay, what's the worst that could happen? Let's buy a bunch now. And then it went down another 99% the
You
day after
found out.
that.
You found out, didn't you? Well, that's what I'm saying. Trading on
What's
price,
wrong with that logic? Walk us through, for traders out
because
there
trading
learning
on
here.
price alone is not, it's just not a successful strategy, right? First of
Yeah.
all, the discounting mechanism, so you can argue on a very simple point. If something goes down 99%, there's probably a reason for it. And the answer is because it's going to zero, right? Which is probably what
Okay.
that thing, whatever you're talking about, did, right? And you can also argue that about something that's going up a lot. Why is it going up a lot? Well, we find out later why that was, right? It's not all the time. Not everything that goes up continues to go up to the moon. Not everything that goes down continues to go down to zero.
Mm.
But over time, I think you'll find the market knows more than you do, because the market is made up of everybody, and
Yeah.
everybody together knows more than you will, right? So
This is not a,
fighting the market is a mistake. Fighting
okay, fair.
positioning, trying to be contrarian on positioning the way that I do, I think is much better than just trying to be contrarian on price. Trying to be contrarian on price will get you run over.
This is not so much a positioning thing, but we're just looking at two data points, or two data sets rather, that have historically moved in tandem. I'm talking about gold and silver. So this is an interesting exercise here. The silver chart is represented by the purple line here, and gold is the bar chart. So in the past month, as you know, silver's run up by itself without gold moving much. Historically, it doesn't really do that. When you look at a pattern like that, is that a trade signal to you, or do you not care?
I don't necessarily care, but I would say that here, based on positioning, short
Hmm.
gold, long gold, short silver is a nice trade to me here.
Let's take a look at something else. Crude oil has been moving a lot on the news. Can you walk us through any data you've been looking at in the Commitment Traders Report or anything else?
There hasn't been anything major in crude in the Commitment of Traders report. The one thing that I would say about crude, um, that I think people might be missing is I understand it's in the headlines now because of
Yeah.
what's in the Middle East. I understand that it had a big move, on the day that, everything kind of went bad over there. But if you really take a look at it, crude actually bottomed on May 5th. Okay. So it bottomed over a month ago, right? It's been in a bull phase for a month before this ever happened, right? And just as an aside, on May 5th, we had, it was either Saudi Arabia or OPEC announced that they were going to increase the amount of crude that they were going to release into the market, right? And the market bottomed on that day, which was a negative news day, right? They're increasing the amount of crude out there, and crude bottomed that day. And we've been going up ever since then. So I think that that's really the point. I understand that the noisiness and the volatility now is going to be brought in because on every piece of news about this Middle East situation, right? Are they going to bomb this? Who's going to get involved? Is it going to escalate? It's going to de-escalate. I understand that's going to affect the day to day now because of this news, but keep in mind we've been in a bull phase since May.
Whenever there's a lot of noise in the headlines, is that in itself an indicator for you in terms of positioning and sentiment?
No, to me, it's something to ignore
Hmm.
personally.
But doesn't it hype up sentiment? Like if everyone's talking about war blowing up in the Middle East, and,
It
oil's going
depends.
up.
It depends. It depends. Sometimes it does. Sometimes it doesn't. It's the same thing. Ukraine, Russia, when it broke out, was the top of the oil market, right? Um, Late last year, again, the first skirmish between Iran and Israel was the top of the oil market. So suddenly people start to see that stuff and they think it again, right? Well, this is always the top of the oil. Because what happens is they bought it last time thinking that that was going to be a thing and they got burned. So this time they're going to learn that lesson and they're going to say, I'm
Mhm.
not going to chase it this time. And then they don't chase it. So the position doesn't get too long. So the market can continue higher. Like this is the adjustments that get made in the discounting process of the market, right?
Yeah.
Sometimes psychology will follow and sometimes it won't. It doesn't feel to me like psychology is following here, which makes me a little nervous because if that indicates that oil is has room to go higher, what does that say about what's going on, right?
Okay.
Uh, so I'm a little bit nervous based on that here, and everything. I think now is a great time to be being very, very careful in the markets and looking for places, I believe, to try and provided things don't change in the positioning and the sentiment, looking for places to buy stocks because I think the second half of the year is probably going to be a very good one.
All right. Well, I'll finish up the markets conversation on just summarizing what we discussed so far. So your top longs and top shorts right now.
I think that from a very general sense, the whole game here, as many people know, is the AI game, right? If you are looking to be long things, that's the place to be long. Things that benefit from AI, right? Like energy, like nuclear energy, like uranium, these type of things, right? Um, no matter what happens, I wouldn't say no matter what happens, but almost no matter what happens in the Middle East, no matter what happens with the Federal Reserve's next interest rate decision, no matter
Mhm.
what happens with the dollar, no matter what happens with gold, the money that's being invested into this space is not stopping, right? Amazon's not going to stop investing in this space because, whatever, Israel drops a big bomb on Iran, right? Um, there's a war going on. This is the future. The people that control this area are going to be the biggest beneficiaries in the future, not only from a corporate thing, but also I think from a national thing, right? As they very well know, this is a whole issue between the US and China, as we very well know, right? Access to the stuff that people need to create all these things is really the issue. So that's the center of the universe here. Everything else to me is noise, right? And you can say AI is a scam, okay, and all that. And if you want to say that, that's fine. Then look to be short that stuff. But I would wait to do that until, and I can't tell you if what I don't know the first thing about it. Okay, I am no computer scientist. I'm no physicist. It's way above my pay grade. But if you think it's a scam, then you can look to short these things, but I would wait until the market tells you that it is agreeing with you, which it is not doing right now, right? These stocks are going up, up, up a lot. Not just the big seven names, but under the surface, a lot of these other names. Look at the
Yeah.
nuclear, look at Oklo. It's like a triple this year. Look at, URA, the uranium, it's up a lot. These things are going up, right? I wouldn't fade those prices yet, right? If you think it's a scam, it's fine. I'm not even going to argue with you. At least wait for the market to confirm that. Okay, because there's a long way down if it's a scam. So you got plenty of time to get short that stuff. But from a long positioning point of view, that's where I would be looking to be. Everything else to me is almost irrelevant at this point, right?
How do
Uh,
you gauge positioning on something like Bitcoin? Let's just take Bitcoin, well, other cryptos, but let's just take Bitcoin for example.
Bitcoin has a
Uh,
CO, has a commitments of traders too, based on
yeah, on the futures.
right.
Um, is there anything else that you would look at?
I
I
mean,
mean,
you have to
futures
sort
is
of that's data, so you can't argue with it, which is nice. You don't have to
right.
interpret it. It's data. Here it is. They're long, they're short, they're neutral,
Mm.
they're whatever, right? But listening, reading what people are thinking, can help you gauge a general sentiment. I would argue that positioning is more powerful than just general sentiment. People say one thing, but where are they actually positioned is what you want to know. But as an addition to the positioning, you can sort of gauge general sentiment. I saw some data just yesterday about the size of positioning that is going into Bitcoin, for example, has increased by a massive amount. The selling they're seeing are small numbers, meaning the retail, and the buying they're seeing, the average buy ticket, are very big numbers, meaning institutions are getting involved, right? Retail's getting out, institutions getting involved in a general sense. So I like Bitcoin right now, and I'm not a Bitcoiner by any sense. Like I say, I barely know what Bitcoin is, but as an asset, I think Bitcoin's a good play here on the long side.
Okay. Some questions on trading methodology overall. Over the course of your career, one thing that has maybe developed um, as a trend is algo trading. Probably it's being used now more than, in the 90s. But how do you trade in an environment where trades are placed instantly by machines, literally within milliseconds of an event coming out? It's not a matter of positioning. It's just machines responding to what the FOMC press release
Yeah, it
uses.
doesn't make a difference to me. I'm not a short-term trader anyway. I'm a position trader, so the path that my position will go doesn't really make that much of a difference to me, right? If I'm buying it at 10, and I hopefully can hold it until it goes to 30. Between 10 and 30, there's going to be a lot of up and down moves, right? But I'm just trying to buy it at 10 and sell it at 30 or whatever. I'm making up numbers. But so what happens in between with the algos and the short-term stuff is not really something that matters to me because I'm not a short-term trader.
There's some services and indicators out there that track what large institutions are doing. There's even indicators that track what Warren Buffett is trading, and um, people actually use these indicators, indices to make decisions. How could you evaluate this philosophy here?
I mean, clearly it's not a bad idea to be on the same side as some of the best investors that ever lived. But that data's delayed. It's pretty far delayed, right? It's like quarterly. So you don't know what a lot of these people have done in the meantime, you know. Um, so that's a little bit difficult. But in general, if you're gonna follow someone, you know, following people that have had massive amounts of success probably isn't the worst idea.
Hmm. Okay.
Which we can
What's one mis
do in live time or in real time, a little bit more real time than what they provided us with. They provide us with quarterly data, which can change, especially for some of the more active people.
You have a lot of traders in your community, Discord. What are some mistakes that people are still making today, even
Over
after all the
trading,
education? Yeah.
I'd say that's the number one mistake. Over trading. People love the action. They want to catch every tick. They want to catch every move. They want to be involved every day. They love the action, and I think that's over time the biggest killer that there is, and I do still see that with people.
What's your churn rate on average? Like how many times a quarter or month do you place trades?
Maybe 2 or 3 times a month.
Wow. Okay. Great. That was a great interview. Thanks very much. Where can we learn from you?
Well, crowdedmarketreport.com. You can check us out
Okay.
there. We
All right.
have YouTube videos, a lot of free YouTube videos that are on there, everywhere, and then you can go to the webpage, Crowded Market Report, if you really want to do a deep dive into the things that we're doing over there.
Excellent. Thank you very much, Jason. I appreciate it. We'll put the link down below, so make sure to follow Jason there. They speak next time, Jason. Take care for
Thank you,
now.
Dave. Thank you, David. Good talking to you.
Thank you for watching. Don't forget to like and subscribe.